Hi, this is Zach Mayer with the Bulletin Board Heroes weekend edition here at Zach's Traders Cafe for Saturday, the 3rd of June. Starting off with the FTSE 100, where it looks as though the bounce off our RSI 30, which we've said has been a decent signal on the long side on several occasions over the last year, has worked again so far, touch wood, etc. But you can see there, back in June last year, we had a similar incident, September. October, etc., etc. Current situation is that at least while we're above the 200-day line at 75.30, we're feeling quite bullish. It sort of looks as though we're equivalent of that point there back in March, and especially while we're above the old April, or if we can get above the old April low there, support there, 76.30, we'll feel even better. Interesting that the 50-day line is now curling up quite aggressively, and the 200-day line both is rising as well. So it looks as though we could get back up to the main resistance line there back from February around 78.40. But let's just go maybe for the old 76.30 and then back to the 50-day line area, 77.10 before getting too excited. If we break down, then obviously we've got that support line there around 74.75, and then there's the risk of a potential move down to 7200. But this stage we are looking the other way, i.e. up. Moving on to the DAX, which has been leading the markets on the way up. A nice gap through the resistance line there from May on Friday to end the week, so that was pretty impressive. And that sort of it gives us a double bear trap island reversal. So we gapped down back in May twice, and then we've gapped up to start June. Rising 200-day moving average as well, and an uptrend line there from back in October, which is running at almost exactly at the 50-day line area. Above the floor of the gap there, around 15,700, we're looking for a move up to the old May resistance around 16,300. Best case scenario by the end of the month up to 17,000 at the top of the autumn rising trend channel, as you can see there. That would be a decent result. If we do break back below 15,700, then probably the worst we're looking at is neckline resistance back in mid-March around 15,300 at worst. RSI at 55 is on the right side of neutral 50. Moving on to the Dow, which had a very strong day at the end of the week last week, 700-point rise, I believe. And here we're looking for this situation to deliver on the, well, at least in terms of having another attempt at hitting and breaking that resistance line there from last year. That's around 34,000, and we really want to see that broken. There'll be multiple failures at that area, that line from basically April last year. Above 34,000, we've got a chance of not only getting towards the 34,500 area, which is basically 1 year resistance, but a big figure target there up to 37,000 as soon as the end of next month. The current situation with the moving averages is that 200-day line is not rising. It's basically flat, with the 50-day line rising quite sharply, and that is very encouraging. RSI now in the upper 50s, which is right in the box seat in terms of being a lead indicator on a fresh move to the upside. That rising 50-day line looking surprisingly strong. Moving on to Bitcoin, and here you can see that we've been sort of playing around really with the old late March support area, 26,700, finding support there on several occasions. RSI still below 50, so really want to see the market convincingly break that April resistance line, depending on exactly where you draw it. And the 50-day line, which is rather more precise, that's around the 27,900 level. So breaking that, we should be back towards 30,000 by the end of next month, end of this month rather, if we can make a quick push through not only the 50-day line, but also RSI 50. It's currently at 48. Onto the stocks, and still rather slim on the opportunities here. Sort of difficult to find the decent movers, and here you can see that one of them, which was actually requested a couple of weeks back, delivering the goods. Cornerstone breaking neckline resistance around 9 pence. Above 9 pence, we were looking for 12 pence, which is basically post July resistance for the shares. Got the 50 and 200-day lines both rising now, so it may be in order to actually look for a potential higher target than 12 pence, perhaps up to 16, which is a resistance line there from back in August last year. But above 9, looking for 12, and then 16 on Cornerstone, maybe 16 by the end of next month. Stock which is certainly frustrated the bears, who still can't work out why the shares have gone from 2p to up to 14p this year, which is a very decent move indeed. Current situation is that we've got that level at 11p as a key one in the near term. Although obviously we bounced near 10, but the resistance line projection there from back in September at 11p, above 11p, we're still looking for a target as high as 20 or even 21p by the end of next month. First sign of a warning would be an end of day close back below 10p, which was obviously the last support there around 9.8. So anything below that would be the sign that the shares have finally topped out after a stellar run. Europa oil and gas. Here you can see that we've finally broken through the 200-day line around 1.4p. The first time we've been above the 200-day line since the beginning of October. We've had a target around 1.7p. We can break through 1.7. I think we can upgrade the upside for the shares, and that would be along the lines of what I'm drawing now, so up to 2.2p by the end of next month if we can have a swift break of the 1.7p area. Upside still on the cards while we hold above the post-November resistance around 1.3p. Moving on to a stock which is looking and has been looking encouraging, GreenRoc. Here we have a triangle reversal, and that one is one that suggests that we could head up towards as high as 7p over the next 4 to 6 weeks, maybe by the end of next month. Certainly, while we're above the 200-day line there, around 4.5p, looking for 7 by the end of June. You could be more optimistic and upgrade that resistance line there to 7.5, but really 7 is probably a safe destination to look for at the moment. And we still have the potential bonus of the 50 and 200-day lines rising. In fact, they are both rising closely, and that suggests we could be running into a golden cross. The other positive is we managed to, in the middle of last month, close that gap and close above that March gap. So it's a gap close buy signal, which is also quite useful. Stock that doesn't get much coverage either here or anywhere else is HydrogenOne, but that's what Bulletin board here is for. Here we've got a break of a December resistance line, a break of that falling triangle that we had there from October. It's quite an eventuality that we managed to break that falling triangle because they tend to be negative rather than positive. And above 67p, looking for as high as 95p by the end of next month. We haven't been above 200-day moving average since way back in April last year. So breaking above that anytime soon would be quite a coup for the bulls. Invinity is next, and here progress is being made again, and we've also obviously had our spikes in the past, but got a rising 50-day moving average, had a nice weekly close above that, and looking for as high as 48p by the end of this month, while we hold above the 50-day line at 37p, rising trend channel there from back in February. Another stock that doesn't get much airplay is Mercantile Ports. Here we've got the chance of a turnaround off the back of the bullish divergence that's been in place over the last few weeks. We've had a lower low for the start of June, but much higher RSI trace. So that bullish divergence suggests that we might have a turnaround here, that the new low is not being accepted by traders, and looking for a potential target here on the upside as high as the top of the triangle I'm going to draw now, maybe around 7p by the end of next month. Obviously, at this stage, we don't want to see any fresh lows below 3p on this situation. On to Palatra, which has had quite a lot of coverage here. Here we're looking at a situation where we almost hit the initial target here that we've had around 6.5p, rather 8.5p on Friday. Above 8.5, looking for as much as 15 by the end of next month, that December resistance line projection. And ideally, we don't fall back below the 50-day line around 5.75p in the meantime. Bit of interest in quantum blockchain, which looks as though it's delivering on its promise to give us speedy Bitcoin production. Here we've got a rising trend channel that's been in place since back in July last year, and looking for the shares to break above the 2p level to give us a target up to 2.7p by the end of next month. And you can see that very long rising RSI line and multiple bounces of that, suggesting that this is a stock with decent momentum behind it. Sareum is next, and here we have The shares breaking above the 200-day line again. We managed to bounce above the rising 50-day line, which tends to be a buy signal in its own right, a technical one, obviously. And the first target here up to £1.60. Hopefully by the end of this month, by the end of next month, we could be up to £2 and closing both the gaps down that we had back in October and November. Ideally, no sustained price action back below 114 and 115, the recent late May support. On to Thor Explorations, which has pivoted into lithium, and the shares seem to like that. Rising trend channel here anyway that we've had for over a year. But it looks as though on this occasion, with the rising 200-day line and bouncing above that, around 17, we will get our long-awaited target up to 23 pence. Just a couple of to go, and both are actually bear targets, vicious bear targets, one could say actually, over the last few years on Tern and the final stock, Versarien. Here with Tern, we've had a bear trap from below the April support line or support area at 4 pence. Bullish divergence as well, so ignoring what the bears are saying about the company, a break of the 5.2 pence area and the 50-day moving average could take the shares up to as high as 8 pence and the 200-day line by the end of next month. Ideally, no price action now back below 4 pence, so that's something to watch out for. You can see the RSI is pushed above neutral 50 for the first time in over 6 months, first time since December, so that does show a turnaround, a technical turnaround could be on the way. Stock which I was encouraged to chart, didn't really believe it was going to turn around, but it did break that resistance line there at 1.3 pence, February resistance line at the end of last week of last month. We had a nice rally to the 3.25 pence area, nearly beat that on Friday. But above the 50-day line with this V-shaped bull flag, we're looking for 4 pence initially, hopefully over the next week or two. And as a best case scenario, by the end of next month, up to 6.5 pence. The other plus point is that the shares on Friday gapped through their 50-day moving average and bounced above RSI 50. So that was a double positive signal on Friday, and hopefully the holders of that stock will get some relief after all the sell-off that we've had, especially since back in November when we were trading back above 20 pence. That's it from me today. More updates during the week.